Hello, this is Brian Shannon from Alpha Trends Blogspot. It is Monday, the 28th of May, 2007. Happy Memorial Day. We've got the S&P 500 on the screen right now. And I wanted to start with this because I'll get to some stock ideas in a moment. But basically, the S&P 500 is still in a very good uptrend. There's no doubting that. I've pointed that out in the other video from Friday's wrap-up, that we had this level of prior resistance acting as support in here, also near that rising 20-day moving average, and also pointed out the 38.2% retracement of this move from the highs back in February. So it appears as though we're at a level of support. However, I do think the market is still susceptible for a little bit further consolidation or pullback in here. So I think you want to just go pretty slow this week until we get a little bit firmer footing. And I'm going to start out today with a short sale idea, not because I think the market's going lower, but I think that most people don't stick around for a short sale idea when I put the longs first. So let's start out with shares of Akamai, symbol AKAM. The stock is in a downtrend. We see that on a daily time frame where it broke down through some what appeared to be pretty important support that's been tested a couple times late last year and earlier this year at about that $47 level or so. That level has been acting as resistance. In fact, it hasn't been able to get back up towards that level. And we do have lower highs in here. So we've got a declining 10, 20, and 50-day moving average. That 50-day moving average just crossed the 200. That's not really a significant event, but some people do take notice of that. On the weekly time frame, you can see that that $47 level here has been that important for a better part of a year, and you could make a case that this is a head and shoulders top as well, which if that were the case, you could make an assumption that it could head down towards $30 a share. That's not what we're going to be looking for, and I don't know enough about Akamai to decide whether or not it's capable of going down there. But based on the chart, it looks like there's selling occurring in this stock. We've got this declining 5-day moving average on the 10-minute time frame. So I think that for a trade, if it gets below 43 bucks a share, that's where we'd want to sell it short. And then set a stop up above Friday afternoon's high, not above the high of the day, but above the afternoon high at about $43.38. I think the stock could make it down towards at least $41.50, possibly even go test these lows at 41, and who knows after that. But we're going to make our target conservative down at this $41.50 level with a risk right here of just 38 cents. We'd be looking for $1.50 in downside, so that's a very nice risk reward, 38 cents of risk for possibility of making $1.50. On the long side, we've got shares of United Online, symbol UNTD. You can see the stock broke past resistance here on a big surge in volume. Volume is big leading up to it, and it's consolidated in a fairly tight range here over the last 3-4 weeks and hasn't given back anything. So it looks to me like the stock is getting ready to move higher once again. If you look at the weekly time frame, you can see multiple year highs in here, and on the monthly time frame, it looks like it's still, and that was an important breakout past this 2004 disaster area. And I think it can continue higher from here. So looking at a 10-minute time frame, I think if the stock makes it above $16.40, that's where you want to make a purchase of the stock. And as far as risk goes, let's set a stop at $16.18. That's 22 cents lower, so just below Friday afternoon's low. 22 cents of risk, and I think the stock can make it up towards at least $17.30 is going to be the price target. So that's 90 cents of opportunity for just 22 cents of risk. Lastly, we're going to take a look at Prestec. I mentioned this one briefly last week, but Prestec broke past some resistance in here that appeared to be pretty important as well. Let me just reconfigure this so we can see the scaling a little bit better. Okay, so you can see that it broke past this resistance. That resistance has been acting as support. We've got big volume here on this upside and lower volume pullback. If you look at the insider transactions on the right-hand side of the screen, some Kellogg guy, I don't know if he's with the cereal, but he's been purchasing a bunch of this stock lately. And there's also a very big short position, 5.7 million shares, which based on last month's average daily volume would take 20 days for the shorts to cover. So it's held up very well in here. Looking at a weekly time frame, I think it's got good room to at least $8 a share, and that's going to be our price target, is $8 a share. So what I'd like to see in here would be for the stock to make it past $6.95. I own calls on this, by the way. I bought some of the, I forgot what month, but I bought some of the 7.5 strike for just 20 cents. Anyways, I think the stock getting above $6.95, I'll probably buy some common stock as well. And then I think the stop for that ought to go just under here, about about $6.78. So that's just 17 cents of risk. And with a target, like I said, of $1.05 or $8 a share, that would be $1.05 with just 17 cents of risk in shares of PRST.